Japanese candle patterns is one of the most powerful technical tools in the world of technical analysis. A lot of traders use them on daily basis for day trading decisions. Some traders rely solely on candle patterns. Some traders love to combine candle patterns with other indicators or other methods of technical analysis, and some traders love to combine the higher time frame candle patterns with lower time frame and get the best of the trading decision. There are multiple ways how to use the Japanese candlesticks. And the reason for that is simple. Every single Japanese candlestick, which is the advanced or the more modern representation of the classical bar, has a story. It gives us, the traders, the most valuable information we need. The open and the close of the period we are looking at, of the bar, and the high and the low during this period. If we are working with a daily time, for example, then every single candle or bar would represent one full day. If we work with a weekly time frame, then it will represent a week. 1 hour chart time frame, it will represent 1 hour, etc., etc. So there is a story behind every single candle. Where the price opens, what are the buyers and the sellers do during this very specific period, a day, a week, 4 hour, anything of any of the other time frame, and who gets the control, the size of the candle, the distance between the open and the close compared to the high and the low, and then in a more advanced view, the combination of several. So the ability to understand candle patterns is, from my point of view, crucial. And a trader who understands candle patterns, and mainly not just the patterns, but mainly what each candle tells, the story behind. As I said, where are the sellers, the buyers? Each part of the candles, what it represents, will have huge advantage over others, those who just trade based on specific rules like indicator cross or whatsoever. So the ability to read the price and the candlestick is the best representation of the price action, because that's the pure behavior happening during this very specific period between the buyers and the sellers. There is nothing more pure than that. Okay, it's the absolute control of buyers and sellers and the ratio, okay, of their force. So it gives you so much valuable, and yet for some reason most traders, well, they underestimate it. Let's admit it. Who has the time and the energy and the willing, right, to go and to do the analysis in the proper way? Really, we all want what? Oh, this is an alert for a buy. Ooh, this is an alert for a sell. Oh, look at that, the trend line is broken. Hey, look at that, the support and resistance. Bam! So we all want the simple solution, the simple way. Who wants to work nowadays? No one. And unfortunately, a lot of traders fall into that, and they spend time on the next promising alert, the next promising tool or indicator that will just alert when specific thing happen, and who cares about the rest, right? Unfortunately, not always it will work this way and in the favor of those who prefer the shortcut. There is no shortcut. The advantage goes to those traders who do their homework prior trading. The better the preparation in anything in life, the better you come prepared to a specific event. It's like reading a presentation in front of a crowd. Think about it. If you just come and, I'll be fine, I can just read the presentation, who cares? What will happen when you go there and you will start reading and you will have no clue how to react to a specific situation, and you will find yourself confusing, and so on and so on and so on. The market will do the same to you. The market will put you in this situation where you what should I do now? Always. So the more prepared you come to trading, the better your chances are. And Japanese candlesticks and Japanese candlestick patterns in a specific way would help you, or will give you the edge of understanding a specific situation. So in this video, I want to share with you 3 of my favorite candle patterns. There are more, but these are the 3 of my favorite candle patterns, and I want to explain why and to give you the strategies I love have to combine them? Where do I pay attention to the candle pattern and where do I say better to skip? And I want to explain why. It's the most important thing to understand the why, the logic behind the scene. All right, ready? So let's begin. And before I continue, I would like to ask your support. If you find value in this video, please hit this like button. If you are new to this channel, please consider to subscribe to the channel with the subscribe button below this video. Just remember, enable this notification so you know when there is a new content available for you. And if you can, few words in the comment section would make a huge difference for me, my channel, and my team supporting me. So thanks in advance for all of your support. So the very first candle pattern I want to talk about would be the hammer, the classical hammer, and the shooting star. Shooting star is a representation of the inverted hammer, which appears at the end of a bullish. So let's take a look on the chart and see how does that look like. What should you pay attention to when you scan for hammers and shooting stars, and what is my preferred strategy to use them? So as you can see on this very chart, draw it here for you, we got several shooting stars and hammers. Okay, now the indicator you see on this screen is the indicator I use for to find the candle patterns. You can get this indicator or any other of my indicators directly from my blog, and this is how you can do it. So here is how you can download the indicators, tools, and EAs we have for you directly from the marketplace. All you have to do is to go to the blog vladimirrybakov.com. The next step, my strategies and courses. Then follow and get it right to here, Vladimir's in-house indicators. Scroll down and you will find all the available indicators, tools, EAs, and other solutions we have for traders in this marketplace, which we continue to develop. Choose the ones you love. Get them, download, install, and enjoy. So after you got the indicator, if you need help, if you're going to spot them by yourself, of course, you don't need any indicator. Then you install it on your platform and you choose which patterns you want to see. Okay, I isolated these patterns so it will be easier to explain in that example. So what I love to, first of all, what is a shooting star? As you can see right here, and at that point, and that point, and right here. Okay, so it looks like a little body with a big spike. There could be a tiny spike on the bottom as well, but the bottom line is you got a spike which is bigger than the body. Okay, what you need to note here, and that's important thing because many traders don't pay attention to that, and that's the size of the body. So if this is your high and this is your low, okay, this is the 50% of the distance between the high and the low. I love to see that the body is below the 50%, ideally even around the 40 or lower. Okay, that gives a better, I would say, reliable candle pattern. Same applied to the hammers. Okay, candle with a little body and spike, but this time the spike is on the bottom. Okay, and what we want to see is if this is the low and this is the high, this is the 50%, we want the body to be above the 50%. The logic behind these candle patterns is simple. Okay, let me just explain here. So what happens at that very moment? Okay, buyers take control. This is why it usually appears at the end of an up move. Okay, oops, sorry, just draw it for you here. At the end of an up move. What happens then? The buyers are trying to keep their momentum, rejected by the sellers, and the sellers take the control, right, and close on the lower part of that period, a day, 4 hour, or a week, or any other time frame you use. Okay, giving the boost that the traders are looking for, that the sellers rejected the most recent rally, and there is a great chance it will continue and bounce downside. And this one, let me just erase this pattern, and the hammer appears at the end of a bearish move where the sellers are in control, trying to create a significant low, and the buyers, boom, take the control and reject to close the candle pattern on top of this range between the high and the low, which could be day, 4 hour, 1 hour, and so on. Okay, so that's the logic and the psychology behind this candle pattern. Where does that appear the best? So what I love to see is two representation. First of all, if the candle pattern, let's say the shooting star, appears at the top of a significant resistance or supply area, okay, which I'll show in a moment. Okay, the resistance could be on the same time frame or higher time frame, not lower, higher. Okay, and this line you can see here, let me go to the weekly for a second and you will see this line we can see here is a significant weekly resistance zone. Okay, so when I spot that on a daily chart, okay, here is how it looks like. It comes right on the top, rejects the resistance from the higher time frame, and gives not instantly on the top, but right after it gives a fantastic inverted condition. Okay, in that case, a shooting star. Okay, the inverted or the reversal pattern. So think about it this way. Buyers are in control. We start to see spike, right on the rejection or the resistance from the weekly chart. Then we got a massive bearish candle, okay, some doji without clear decision between the buyers and the sellers, and then a beautiful shooting star inverted pattern comes in play. A beautiful saying that the market is ready, very likely to go for a sell. Okay, now as I mentioned before, it could be or resistance or supply. Supply is the condition when the market makes lower highs, lower lows. This area, the previous highs, right, becomes a zone of supply. The next time it would be retested, it could be a rejection zone before the continuation. And that's the case that happens here. We have a high, low, and we come for a retest. The reason I love these conditions, take a look how many candles the buyers are trying to reject to the sellers, trying to push up, but the sellers immediately reject and fight back. Okay, and all that happens on this reversal where we've had higher highs, right? And then the low is broken. This becomes the previous low that was a support, now becomes a resistance and a supply zone of this bearish move. And then we are waiting to see if there will be candle pattern. Boom, right on the zone. Classical opportunity to go all the way down. Where am I looking to buy? When I find key supportive zone, like this, for example, or demand area, where buyers manage to hold the lows of the bullish move. In that case, we got both. So here is what we got. Bullish move. Okay, pretty clean. That becomes a supportive zone, but also a demand zone. Okay? This is where buyers took control several times and rejected every time the sellers were trying to resist, to fight back, buyers push it higher. And now the market comes to retest this zone. Okay, and pay attention to the zone of the spikes always here. Spike, buyers took control. Spikes, buyers take control, right? Two key levels. The hammer comes right here. Sellers were trying to push. Remember the logic behind the hammer. Sellers are trying to push and rejected. Voila. Okay. The next thing happened right here. Okay. It's actually happening a couple of days ago here on the pound cat. Same story. Okay. We got a beautiful high, low, high, and this high is still holding, still rejecting for 3 days in a row. We got a beautiful shooting star, inverted candles, and as long as that hold, we could actually see the market trying to push down. So that's the first candle pattern I wanted to show you and explain how do I love to work with that patterns. Not every hammer is tradable. Not every shooting star will be tradable. So it's important you pay attention to price. Where does that happen? You want to see clear resistance or support, demand or supply areas, which will boost and increase your probabilities to be right. The next candle pattern, and one of them, I would say, underestimated patterns out there, that's 3 soldiers or 3 crows. That's a very powerful candle pattern, and if used properly, it will give you an absolutely great edge and great opportunities. Okay, so what does that look like? That's 3 following bearish candles or 3 following bullish candles. Now, don't get me wrong here. If you get something like that, and then small candle pattern, and then another small candle pattern, that's not 3 soldiers. And that would not be, if you get something like that, that would not be 3 crowds. Okay, so what you want is clear candle where at least 2 of the 3 candles, the body is significantly bigger than the spikes. Okay, because you want a control of the buyers or the sellers at a specific session. So what you want to pay attention to, once again, is the control. Okay, so let's take a look first of all how that looks like. 3 soldiers, as you can see, 3 big candles. 3 soldiers, 3 big sequence. The most important thing here is following candles. Okay, 3 crows, 3 soldiers. It starts here on the bottom, and then we got extra candles. 3 soldiers again. Okay, so that's how it looks like, and let's talk about where and how do I like the candle pattern. So the 3 soldiers or 3 crows, it's a momentum candle pattern. So what I love to see is, again, a bounce of a key level, let's say the support zone. I love the bounce. If there is a pattern here, right, 3 candles in a row, it's a great sign. I like it because it's momentum also in breakout. So for example, we have some trend line breakout, right? And we got 3 candle patterns going through that. I love that. It's a great sign. Okay. Same about ranges. If we got some range here and then a breakout with the candle patterns pushing through the range, boom, amazing opportunity right there ahead of us. So take a look, the first candle or the first pattern on this chart. So this is where our bullish trend begins. Okay? After the reversal of the previous bearish trend, we got the breakout, and then we got to see the market making push up, pull back, holding the pullback, 3 bullish candle. The next situation happens to be, as I explained before, above the range breakout. So we got now a trending structure. We are pushing the market, making trending structure, 3 higher highs, higher lows. Then it follows by a range. Okay, triangle, symmetrical triangle, and it's absolutely fantastic breakout. The breakout happens to be right here, 3 following candles, green candles, significant candles, where the body is bigger than the spikes. Okay, then take a look on this interesting part. The trend comes to the end, and we got what? A trend line breakout with 3 massive crowds. The trend line is retested, and a fantastic sell is delivered. The 3 crowds is the momentum breakout through a trend line. Boom, voila, you got an amazing trading. Okay, same here. Take a look. Support. How good is that? Okay, beautiful move down, support. Look at that. Broken resistance become a support level. All that is an ultra strong key level. What happened since? Okay, we got this trend line and we got this momentum. Boom, higher highs, higher lows with 3 candle patterns. In that case, the 3 soldiers. Absolutely amazing call for continuation. Then another one, same key zone we saw before, right? It comes for a retest here, then another retest, and voila, another classical candle pattern comes and created. One of my favorite, probably one of the underestimated candle patterns. Unfortunately, I think it works for you to really know that, really pay attention to that, and use that. I love these ways. Let me know if you have a specific way to use this candle pattern or any other candle. Share with us your thoughts, your insight, your input in the comment section below this video. Let the others enjoy your knowledge, and thank you in advance, of course, for taking the time and sharing wisdom. And the final pattern would be, one of the most common, popular, yet powerful, if used properly, the engulfing. So many strategies, videos, books, presentations, courses, you name it, are done about this candle pattern. And yet, for some reason, many traders just try not to, bend the rules, try to recreate the wheel, reinvent the wheel. Why? Use what's proven. So engulfing pattern, one of the strongest. What does that represent? Simple. If you got at the end of a rally a bullish candle, which then is engulfed, okay, fully swallowed, fully eaten by a bearish candle, ideally also to include the spike, so body of the red is bigger than the body of the green, and the spikes, high-low, are bigger than high-low of the green. That will be full engulfing. If it's just the body to body, it will be partial engulfing. Okay, this indicator basically spots them all. So up to you to decide. I love more accuracy, and I love to combine my engulfing in a specific way. So what does the engulfing represent if you think about it? Okay, like we saw the hammer when there was the reversal, right? The logical. We saw the three soldiers or three crows where we understand the momentum, the increasing momentum sequence, right? Following momentum in 3 days or 3 bars in a row. What does the engulfing say? So there was a control of buyers. Boom! In one specific bar, sellers come in, the sellers bite the market and push down all the way. Okay? Same could say, of course, the opposite way when it happens on the bottom. So this is a very powerful candle pattern, especially, and that's the conditions I want you to pay attention to, especially if the engulfing is bigger than several, I would say at least like 7 or 10 candles of before, where the body of the engulfing is significantly bigger than the bodies of the previous 7 candles. And you can see it here also, right? Compare, you can see the engulfing much stronger. And I love to combine the engulfing when it comes with like fake highs or like clean zone. So for example, attempt for a fake high, boom, engulfing. Okay, when that happens, I absolutely love that. The signals it produces are amazing. Okay, take a look here. Rally, correction, rally to attempts to make higher highs, boom, huge engulfing, delivers a move. So take a look here. Rally, pullback, rally, fake high, boom, big engulfing, okay, and delivers a huge move down. Same afterwards, right? Rally, clean rally, fake high, right? Bounces back, creates a massive engulfing, bigger than at least 7-10 candles on average, of course. The previous candles, boom, huge move down. Okay, this engulfing, for example, comes in the middle of nowhere. There is no clearance of any level, nothing, in the middle of a range. So for such engulfing, you will have no value. Okay, pay attention to that. It's absolutely a beast when it comes in a specific conditions like these fake highs I showed before, and when it tends to be bigger than the previous candles. So here are some more examples, as we can see here. Now this engulfing is in the middle of already a push down. Now I personally don't like this too much, but when engulfing comes with a breakout, with momentum, like I explained before on 3 soldiers and 3 crows, when it comes with momentum and breaks above a trend or the most recent high or low, it tends to have a great value as well. And what happens here, we did have 2 waves down, and then this low is broken by engulfing. Okay, so technically speaking, it gains huge momentum. Now, one of my favorite, right? We got the momentum, fake high, broken support now becomes a resistance and huge engulfing. Boom, move down. And take a look on the next scenario. Remember I told you about the momentum before. Same head, same here. Look at that. Okay, sequence of higher highs, higher lows, and the engulfing comes with the breakout. Bullish engulfing causes the rally. Okay, so this is another classical place here, the zone of demand. Okay, I love this scenario. Take a look here. Okay, rally, range, demand, rally, range, demand, rally, right? Then the market reverses, boom, comes to a demand. What is a demand? Where the buyers accumulates their buys. Push, range, or a pullback. It could be a pullback also, and making the low. In that case, a range, right? A lot of buyers accumulate, boom, rally. Accumulate position, boom, rally. So that becomes a zone of demand, okay, where they maintain their interest to make the price go higher. Okay, so same here. Beautiful zone of demand. We come, boom, engulfing, and we got a fantastic rally. Okay, then we get more rally, more of the engulfings here with this false breakout. You'll find them everywhere. Okay, absolutely everywhere. They are golden patterns, again, if used properly. One of things you might want to consider is verify the engulfing, that the next candle also maintains the higher highs, higher lows, or lower highs, lower lows. So if that's a bullish engulfing, you want the next candle make higher highs, higher lows. If that's a bullish engulfing, next candle to maintain higher highs, higher lows. Bearish engulfing, lower highs, lower lows. Bearish engulfing, lower highs, lower lows. It will boost the, I would say, accuracy rate, because it's not one period situation because of news or any other, whatever, sudden reasons. Okay, some clearances. It will actually be for a reason, and not for a day, but 2 days. Okay, and keep in mind, very, very, very important thing, every technical analysis method, concept, element, tool will always work better on the higher time frame, especially when it comes to candle patterns. And the reason for that is because the money that flows during this specific day, week, or 4-hour chart would be bigger significantly than the money flows that in 5 minutes or 15 minutes or 1 hour. There is much more money involved during the day than a specific hour. It's that simple. And the more money flow goes through a pattern or the swing wave, then the better or the more reliable the story that this Japanese candle pattern tells you will be. So that's it for this video. Thank you very much for your time watching it. I hope you find the value in it. I hope you understand the logic behind it. And I would like to take this opportunity and to invite you to join us in our trading family, the Home Trader Club, where you will get your full access to our full trading courses for beginners and advanced, comprehensive media zone full of webinars, live sessions, real-time trading education, and real-time spotted trading opportunities, access to me, my team, and the community, and so much more. Join our family with the link below this video. Thanks again for your time once again. Best to you and yours, and I'll see you soon with more.